presentation of TFNN.
The TFNN Bull Bear Trading Hour. Every trading day live at 10 a.m. Eastern Time. Call now toll-free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials up 149, Nasdaq up 45, S&P's up 9, gold contract down $1.60, trading at $12.11 an ounce. We have silver trading. Where is that little silver market? Where?
Up 2 pennies.
Up 2 pennies. $14.10 an ounce. Light sweet crude down 60 cents, trading $50.97. We'll have those oil numbers out this morning. Bottom line was we got inexpensive energy out here. Notes and bonds. You get the 10-year note down 5 ticks, 119.03. 30-year bond down 10 at 139.19. Now, what you had yesterday, folks, you know, we were talking about this at the update yesterday morning. Bottom line is that it followed through out here inside the bond market. You had some monster buyers. We actually did 3 million contracts in the 10-year yesterday, which is a big number. You know, right now we're at 1 million. We'll see how this shakes out. We get Powell speaking this morning, which is definitely going to
exciting day. We'll see what happens.
Push those notes around, bonds around, currency around. Right? We got the King Dollar. King Dollar's up 115 ticks, trading 97.395. The Euro's at 112.71 to 1 U.S. dollar. The yen is at 113.92 to 1 U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. Kevin and his team, they got an outstanding program. You want to understand options, option strategies, futures upside down. Great program, defined risk. And let me tell you something. We're coming into, this couldn't be a better time to get in the option market and see what defined risk is all about. Because what we have here, we've had the downdraft. Bottom line, market shook it off yesterday. But guess what, folks? We're coming into a weekend, right, with the president and the president of China.
A little G20
getting together. Yeah, so the bottom line is that you want defined risk, man. Like, guess what? That's what the options are all about over the weekend, man. Hey, what are you going to put up?
We'll see what happens.
Kevin Hinks, what's going on?
Guys are exactly right. Things are going to get a little bumpy here going forward. Obviously, GDP came out pretty much in line with the headline number. So now all the attention today goes to Jerome Powell.
Yes.
Who's going to speak around noon, I think, Florida time, 11 o'clock Chicago time.
Yeah.
And so we should start getting some comments pretty soon out of that.
No, there's no doubt. And you know it's going to get interesting, Kevin, is that, you know, coming over the weekend. I mean, the bottom line is that we know when we're talking options, you're talking defined risk. When there's big news like this, you know, you don't know which way it's going to go.
Yeah.
And guess what? If it goes the right way, you know, we can see this market explode topside.
You were sending me a good article. It was about the Goldman team looking at options
That's right.
around the G20 and trying to trade that volatility and maybe some upside risk. They were looking at, hey, I can buy that, sure.
It's a big number, man. Well, we don't know what the number is.
Right.
That's
guys,
the cool part,
you
right?
You guys can basically pick. Options allow you to pick exactly what picture you have for the market come Monday morning or whatever.
Yes.
And options give you an ability to put on a strategy for that opinion exactly.
Yeah, which is really cool because, you know, you're not paying up. You're particularly not paying up when you're talking about only a few days out here.
Yes,
you know,
definitely.
And, you know, we'll see what they price in. And, you know, the option traders are smart. There's no doubt about that. You know, they're going to price in something.
There'll be a little premium.
They better price in something.
They know there's a multinational meeting going on.
Totally.
Yeah.
Totally.
There will be event risk in the options just like it would be for an earnings event or, you know, any event, any announcement coming up. There'll be some event risk in the overall market based on this number. Absolutely.
Yeah. And, of course, what, you know, it's so intriguing, Kevin. You know, we were talking about this yesterday. Who is ever buying these notes and bonds, man, they're buying them hand over fist, man. I mean, it's not that you don't do 3 million contracts in the 10-year, folks, okay? But guess what? You don't see that a lot. And what was interesting, is still interesting about it, it wasn't like a spike. It was yesterday was a steady all-day buying deal. And it came in the 30-year, too. So everyone's wagering as to which way, I suspect on December 19th, what that statement's going to be. More than, we know, well, we don't know,
We might have a little bit more guidance by the end of today.
Yeah, we might.
Yeah.
We might. It's gonna be interesting to see whether he gives any hint of the aspect of, okay, I'm going to lay off the rate hikes in 2019.
Yes. That's what people.
Yeah, I mean, guys, I thought the vice chair, Clarita, who spoke yesterday morning, was really the first. He was relatively dovish when he came out and spoke. So it'll be very interesting with him speaking yesterday, Jerome Powell speaking today, if there'll be any consistency in their comments.
Yeah.
So that's what I think happened yesterday to the market. That's what put kind of a bid beneath the market, made the market firm up and rally. And so we'll see today how it comes.
Yeah. And, when we still look at world markets, folks, okay, and this is where this gets intriguing, is that our 10-year rate is at 3%, 3.07 as we're speaking. Well, it's hard to comprehend that they're giving money to the United Kingdom when they're in the middle of Brexit at 1.3. That, what happens, Kevin, every time I start looking at these numbers, I'm saying to myself, okay, man, that's still a disconnect. That's a big spread that the UK come March can blow up.
Sure. Sure. And there's volatility around Brexit. As you know, there's volatility in the US dollar in all the currencies.
Yeah.
And that seems to be teetering on the Brexit negotiations and how they're either moving forward or stumbling. I mean, the dollar is teetering on that. And now you've got interest rates teetering on Jerome Powell. And then you've got, the overall market teetering on trade and the G20 coming up. So there's a lot of balls in the air right now, Tom.
Right.
And see, folks, it's such a beautiful thing. When you're in the marketplace, right, this is when you can do mental calisthenics in your head. Because it's so cool, isn't it, Kevin? I mean, because what happens, folks, is that as Kevin just brought those 3 points together, you really, as you're going through markets through the years, that's exactly how you want to be looking at things, okay? Because there's always something coming in. In this particular market, we have a lot coming in simultaneously.
Definitely.
Which are going to move markets, so.
Absolutely. I don't know which way they'll move markets, but they'll move markets.
Right. Well, hey, what was interesting? The numbers, we had less people shop and over the weekend, 9 million less people, but yet the amount of money taken in was over 24%.
Okay.
Yeah.
Right.
So
two things that's telling you, right?
Yeah.
That's telling you bigger ticket prices for the people shopping, but also more online.
Yeah. No doubt. And you know what I think? Like, I didn't shop over the weekend, and I forget whether I did last year or not. But I think it's because, I didn't shop because it seems like you always can get a deal. Do you know what I mean? So it's like, hey, I don't have to rush down there on Friday or Monday, to get something. Do you know what I mean? So, but as to the amount of money I spend, I'd say that 80% of it's online.
Oh, yeah. I agree.
It's very...
Amazon had their biggest Black Friday, right? Or Cyber Monday, one of them. So, yeah.
Gotta love it.
Yeah.
Listen, folks, every trading day right here, if you haven't test-driven yet the Thinkorswim platform, real easy to do. Come over to our TFNN site. Hit the Thinkorswim platform, bring it up. It's an outstanding platform. You can test drive it, trade with paper money with Kevin and his team every trading day. Kevin, you have a great one, safe one. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thanks so much, Kevin. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 129, NASDAQ up 29, S&P's up 4.5. We're coming right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up $1.30. You get the Nasdaq up 24. S&Ps are up 4.5. Let's just go over to Tiffany's first. Tiffany got slammed out here this morning. This baby is down 11 bucks. Looks like
quite a number.
A big number.
10%.
You get an ABC down. Your 8-point on this is 117, almost 118. Yeah, it's an 18.8 to be. So you're talking about 90 bucks. Well, look at that. It's 93 anyway. Right. And if we bring this back, what you're going to see is that, you know, these are classics, man. I mean, the whole market's been doing this, you know. You get the break top side. Look at, you know, must have been great earnings in May, right?
Yep.
The top side really big, slammed right back down.
2 quarters ago.
Yeah, so let's see what they had to say here. So the estimate was 77 cents. They made 77.
Maybe total comp sales plus 3%. They were looking for almost plus 6%.
Yeah, right.
However that breaks down, whether that's X, FX, but that's a big miss.
It's a big number.
It's like half of what they were looking for, right? Almost, and I'm sure there's even more in there. Let's see. 2018 earnings per share, 465 to 480. That's below even
so the year's going to come in lower,
483.
Too. Right.
Lots in there, I'm sure.
Yep. And so you'll see that, you know, I mean, the way this market seems to be shaken out, so that high was generated in July. But look at the numbers that, it's amazing, folks, that the numbers that these equities are down.
Yeah.
You know, 141 to 93.
Right.
Now, you can make the, you know, well, can't make too much of a case for Tiffany. It was trading there in August of 2017. But,
no, right. Yeah. How about Salesforce, CRM?
Oh, yeah.
They're on the flip side, as in they're higher, but they really, I think, in one more time, they were much higher. And I don't know if you heard the update. They were, okay, so they're sitting at 133.
139
That's what, yeah, so check out the opening.
Yeah. Opened at 139.60. And, you
still
know,
up almost 5%, though, so they came in with some numbers.
You know, so, you know, what's intriguing, like, when you look at that, now that came out with good numbers, 161, you're at 133, with being up.
Yeah. It was just at, what, the 116? What's...
Yeah, 113.
113, jeez. It's a $20 pop, 113. It's up 15% off the lows.
These are big numbers, man.
Yeah, some volatility, for sure.
Oil. Let's go to the oil market. We got oil happening out here, folks.
Okay, we sure do. Wednesday, It is 10:21 right now. We get those crude oil numbers at 10:30 Eastern Time, EIA. We have crude trading at 51.23. So I jumped in here. We're going to take a look at some of the volatility trades maybe. We got oil trading at 51.22, looking at the January contract. We're going to have options of $51 is going to be our closest to line up to that.
It's not that bad.
It's not that bad. When I pulled it up originally, we were just there. I mean, we were just there, like, you know, almost at the break, literally. Yeah. So that would be the, and you'd have a little bit of a bullish bias, right? Because you got 21 cents of intrinsic value to the bullish side. Cost you $31. About 21 cents of that's intrinsic value, 10 cents in premium. And then on the flip side, you're probably going to be paying about, I was going to say $10, but a little bit more because you're out of the money from 51 to 49.50. So that's $45, a little bit pricey, but it's because you have this, and as I say, it's even ticking back down. Let's see, 29. So you're looking at $43.
Okay.
And the new ones line up with the same exact price. So all you're paying for is the extra time. So there's your bullish spread. So you can really see there's 51 to 52, 51 to 52.50, and you're paying, you know, an extra 5 pennies, right? 51.37. Bullish side's 36. It's a little pricey.
Yeah, it's going to be pricey today.
Especially if you got to move down, it's really pricey. And then 19. So you're looking at
55.
55, right? And if you need 55 cents of movement, and you need it away from 51, so if you get it to the downside, you need 70 plus cents of movement, right? It's a tough one, but you know, you could always take one side of the trade. Like if you were bullish, that's not a bad trade to have exposure till noon, and you're getting in at 51.36, the market's at 51.20.
Right.
And you're capped out with inventory about to come in 7 minutes. And let's just see, I checked in, the dailies don't line up as well for volatility, but I mean, that's a nice out of the money spread maybe to the bullish side. Wow, they're putting in a little bit of premium as they should. But
look at that.
Yeah, so contracts trading 51.18. You don't start getting any value until 51.50, and they're still pricing in at 51.77. Now you can be the other person. You could sell that side of it, right?
Yeah.
If you want to risk 274
to make 26.
To make 26, and it's a tight market, which is nice. So there's a fair market. Look, I mean, it's sticking in 1 penny sometimes, which is nice. So you know that it's a fair market. When, which side are you on? That's what you get to decide. With the way oil's been moving, I mean, and you can always close it out.
That's the 230. That's right.
Yeah, so that's why, I mean, that's, you know.
Now, folks, put that one up again, the 276 to the.
Yes.
Yeah. Now, I just want to show you, not in the oil market, but this is what happened when the guy in the gas market blew up. So, what you have here, right, you can see that 274 on one side, 26 on the other.
Sure.
Bottom line, that'd be what we'd be doing here if we did this is that you're selling the call. You're selling the right.
Yeah.
And
at least this one, I would even say to go further, like this is a capped loss, like as opposed to selling an uncovered call.
Oh yeah, no,
but this is like a 4-leg strategy where you at least you're capped out.
Right.
You know?
Exactly.
That's
exactly. And he wasn't capped out because it was in the futures market too. Yeah. But that's what you're talking. You know?
Yeah, huge risk to right, because you're absorbing that premium. I mean, that's, you know,
you're picking
people are paying for that premium.
You're picking up nickels in front of a steamroller, as our man Z would say in the den.
Right, right, you know.
And it works for a long period of time, by the way. Okay, you know, it can work for years until it doesn't.
I mean, you can see the difference in the price. I mean, even though you don't have value till 51.50, there's still a 60-cent difference in where it's trading to where the market's trading, and that's the premium that you'd have to your break even.
Yes.
But we know how oil trades, and we'll get the numbers in 5 minutes.
Right.
And 60 cents might seem like a tremendous amount, but not when you have $3 of exposure, and you have till 2:30, and we're probably going to see oil pop at least 25 to 50 cents.
You already had Putin and MBS talking this morning. Putin saying, because there's some people that are already getting together for that G20, but Putin saying, yeah, he's happy with $60 oil.
I mean, just going back to 24 hours, we went from above 52 to a low of 50.31 to 52.50 to back down to 50. I mean, that's large moves for sure, and the market knows that. So we'll see. We get the numbers in like less than 5 minutes.
Big numbers.
Yes.
Pretty wild.
Yes.
Let's go inside the Dow Industrials and see what kind of strength we have inside the Dow out here. You get United Health, man. That's on a tear. Look at this. United Health's up another 2.5%. Let me see this chart. Look at this chart, man.
Quite a 4 days, 3 days.
This is just
They come out with earnings maybe a few days ago to start that run somewhere in there. Maybe.
This is something else, man.
Quite a rocket ship.
It is.
Looks like Amazon.
Look at that.
Seriously.
You know, you go back to 2010, you're at $27. So it's a 10-bagger.
Yep.
They must be taking over the health business or something, man. That's...
Well, $250 million company.
Look at that.
Yeah.
Wow, they take in $250 billion a year. 225 billion they're on this year. 243 billion next year.
And look at
the
earnings.
growth. Look at the growth, man.
Yeah.
That is insane. As I'm saying, looking, like if you're not watching Tiger TV, you can't see it, but they're talking about growth statistics, folks, from 10% to 25%.
So 2017 revenue, $163 billion just on the healthcare side, and they're growing at 10%. And then if you just combine these, you're looking at about $90 billion, growing at 20%, 25%.
Like that business, man. Holy cow.
$100 billion in revenue, growing at 20%.
Stay right there, folks. Tommy and I come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to those oil numbers.
We got them. Crude oil inventories rising 3.58 million barrels. I believe the estimate was only about an increase of 1 million barrels. You have gas inventories falling 764. Let's jump back to the charts, see where we're trading. Here's our oil, and it looks like we did have more than we thought in terms of what the anticipation. We were trading up at 51.20. We got to trade under 51 bucks, $50.83.
Look at that. That's a quick 40 cents.
It is a quick 40 cents.
Right.
And you know, what did we say? The bearish ones, right?
That was the hottest one to come into the
Yeah,
run.
you had the daily one costing you like what 55 cents, but that was below 51. A lot of those 51 was going to be our max loss, right? Or where they would expire.
Right.
Yeah. So we'll see what happens. Oh, and there's the full breakdown. Yeah, so median estimate was about an increase of 1 million barrels. Crude was, you're saying API was a lot more than that?
6.5 last night. Okay. Yeah.
Cushing crude 1.1, Pad 3 5.8, 5.8. Look at that. I mean, that's probably
big.
Factoring in. And gas. So gas was looking for an increase, came in actually at under 764 for a draw.
Big numbers, man.
Yes.
And if we go over and we take a look at that CL1, this oil market, man, I'm trying to, you know, you're in the winter anyway. I mean, you know, we drive less in the winter, but that's, you know, that's normal because, you know, there's a lot of bad weather around the country.
Such is life, right?
Yeah. But you can see, you know, when you get this continuous contract up, you know, we get some support here at the $50 level, but man, this 45 is sticking out like a sore thumb.
Oh, definitely. I mean, we're trading at 51. We could be at 45 in 2 hours.
Seriously.
Just, I mean, look at that.
Look at that.
Every day. Is that no? It's a weekly. I was just supposed to be. Is that a day? I mean, even a week. I was. So what are we back to right there? June of 16.
Yeah, June of 2016.
And I was just going to point out how wide all of these bars are. Starting here, you have a $5 bar, right?
Yep.
You have a $5 bar. You have a $7 bar, $7 bar.
Yep.
So that's in a week.
That's dangerous.
It's Wednesday, and we're only at a $2 bar.
Well,
we got,
what's wrong?
Yeah, we got $3 to $5 to go.
Wow.
We'll see. And let's just jump back one, because this is a delayed, I think, right? Is that delayed?
That is delayed. Yeah.
And
oh, there we go.
So 50.69 as we jump on there. We're already 30 cents below that level. And it's 3 minutes. Now, you can see why they were charging that type of premium till 2:30, because we just got 70 cents movement in 3 minutes. So we'll see what happens.
Big numbers, folks.
Cheaper gas. I like it.
No doubt. Yeah, we all love it.
I do. $50 barrel oil.
Yeah.
Sign me up for that.
Totally. We take a look at, oh, we got to go to GE. So this is...
I saw some stories out there. Go ahead.
And, yeah, in the Journal again this morning, right, they start, you know, tearing this apart. And so listen to this, folks, and I didn't even understand this part myself. So the $15 billion that they had basically written off for the healthcare business, right?
Okay.
They own Genworth, okay? So bottom line is that they got a $15 billion right off there, and analysts are thinking that that's not enough. That's not enough to pay in the future. But listen, here's the kicker, folks, okay? They not only own Genworth, they reinsured all these other companies. Okay. So they're on the hook for all this other long-term care, okay? So the Journal lays it out in there this morning, like, you know, they just don't think, no one knows what the number is. That's what the Journal basically is laying out, that, listen, in the long-term care business, no one knows, number one, how long we're all going to live, number two, the health care costs, how fast they're going up, and, you know, they were just talking about the aspect that they don't think that the funding is there. That's, you know.
They're underestimating.
Oh, big time. Yeah, you know. So I suspect when it all said and done, you know, that's going to be one of them that are going to drag them down in a big way.
Sure.
And then they came into the aspect, evidently, in 2020, there's another rule that comes in place for the long-term industry. Okay. And they're absolutely going to have to look at the write-off, and there's different regulations. And they think that's going to go higher also. So,
I mean, they obviously have some debt problems. They're a $65 billion company, but they take in $120 billion a year. I mean, you know, that's amazing in terms of they're only worth half of what their yearly revenue is.
Right. Yeah, that doesn't make any sense, right?
No, and it's, you know, of course, they have shrinking revenue that's going to be, you know, if they're a dying company. But they have shrinking earnings. It says they're going to peak up maybe in 2019, but in reality, that's quite a downtrend even from 2017 to 18.
It's huge.
Yeah.
Absolutely huge. And, you know, the hardest thing, folks, what the Journal was also talking about is that it's not like there's not like a lot of buyers out there, because other big buyers are worried about the aspect, even in the insurance business. Like I said, he went to Berkshire Hathaway. They've been going to the big insurance companies, see if they can make a deal with them. But even the big insurance companies are trying to figure out, okay, you know, what are these policies really worth?
Sure.
You know?
Yeah.
So.
How about Apple up $1.69?
Yeah.
On it. There we go.
So you trade 175.97. You get, let's see what we got here. You get 9.8 million shares.
I mean, pretty remarkable. We were down yesterday. We're now far above that level.
Yeah, and you know, Apple, even in this bounce, this can get a decent bounce. It can get up to 185, I think. You know, we put this back. You're going to see. What you want to wrap your head around when you get big retracements, big downdrafts like this, folks, you really want to wrap your head around what is the percentage move. You know, because the dead cat bounce is a 0.382. And that'd get Apple to 194. That's a big move, man. Definitely. You know what I mean? But guess what? We just moved down from, you know, over the $233 mark.
I know. We just went from 233 to 170.
Yeah. And we'll see. I think Microsoft overtook them yesterday.
Yeah.
835 and market cap, and Microsoft.
838.
838. Yeah.
It's pretty remarkable, too. I mean, Apple, they were so far above that trillion mark. I mean,
they were.
Yeah.
So let's take a look at some of the high flyers out here inside the NDX. You got Adobe up 3.3%, Symantec's up 2%. Taken away from it, this is a big number. Western Digital's down 6%. Seagate, so the digital,
drives,
the drives down 4%. Winds off 2.5.
Uh-oh.
Yeah.
Macau gambling. It's not happening, I guess.
We go take a look at wins. The low for the year is 92. Look at this. Oh my God. The high's 203. This is another one. Big numbers, man. Holy cow. You better sell. You know, our man David White, when he says that, and we close the show. Sell when you can, not when you have to.
Totally.
This is like, you know.
Because you might have to at 110, and you might have wanted to sell at 202.
Exactly. And that 20, man.
It is. Especially when, you know, you had that run basically all of 2000. We're at 85 coming into 2017.
Yeah.
And we even closed out the year at 166. So even if you just took it there, right? I mean, that's quite a January 1st to December.
Right.
But even if you decide to wait until after the new year for tax reasons, man, you got a gift up to like 203 in no time, and then back up there.
Unreal.
Yeah.
Big numbers. The thing is, I'm really trying to figure out is that what has gone up inside the S&P to keep the S&P even up a little. You know, because so many of these equities are down.
Sure.
You know,
especially the big ones.
Huge.
Apple.
We have the Dow Industrials right now up 128, Nasdaq up 15, S&P's up 3.5. Stay right there, folks. We got our man, Mr. Teddy Cakestack, coming back with us. We are going to be talking currencies.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow Industrials are up 123. We get the Nasdaq up 16. S&P's up 3. Let's go over to our man, Mr. Teddy Cakestack, as we do each and every Wednesday at 40 past the hour. You can find Teddy every trading day at forex-trading-unlocked.com. Teddy Cakestack, what's happening, brother?
It's a cold day in Chicago, guys.
It's a cold day in Florida, man. It's 60 degrees.
No, 60.
Twisting the knife, man.
Oh, man, I'm telling you. You know, we were freezing, though.
Chicago cold's a different kind of cold, man. We know that's why we joke. Even compared to Boston, it's a different kind of cold.
We know Chicago cold.
It is.
Yeah, that lake, that cold weather coming off that lake,
too,
man.
that wind chill.
Totally. Hey, so currency-wise, where's the heat and where's the cold inside these currencies, man?
I think the heat's going to be coming off of Chairman Powell's speech that's coming up in another hour or so.
Yeah, yeah. So it's going to be intriguing as to, you know, I mean, I don't think we really can expect him to lay out what he's going to do in 2019. But I think the market is certainly looking. I mean, the dollar keeps running around this this area, the euro. I mean, the pound. They're all basically at kind of swing areas.
Right. Well, I agree with you that the speech today, I think, is not going to really have any indication of the next year. I think the biggest thing is the stress test on the U.S. banks because most likely they're going to pass with all flying colors for the most part, I believe. I don't think there's going to be any surprises. The surprises would be the things to watch because that would affect Brexit and the English banks especially.
Yes.
So as long as there's no hiccups or surprises with our banks, then things should be pretty smooth.
You know, when we take a look at this pound, I mean, it's hard to really, you know, I mean, I know that it's all about the news flow and, I mean, they're going to get this deal done or not.
Right.
But it doesn't...
We're kind of right at that lower level of the 127, right?
It is.
Yeah, it's just riding this low. Like the 127.50 is, I think, pretty much a pivot point.
Okay.
So, and I think that, like, besides the Powell speech right now, you kind of have to watch the dollar Swiss, which is floating right. I think it's right on parity now. It was trading below it before we started to speak.
Okay.
So, and if you've looked at the chart recently, it's kind of like there's a head and shoulders pattern forming. So I think that if the Swiss can rally strongly above parity and make a run for the highs, especially make new highs, well, obviously the dollar bull is raging, and you're going to probably see the dollar keep on marching forward through December up until the holidays. But if it fails, and especially if you look at the most recent low that we've rallied off in the dollar Swiss, if it takes that out, then I think you're going to see a big dollar slide and a major shift in all of the currencies versus the dollar for at least like a 2-week run.
Yeah. Well, it's so intriguing you're bringing this up because what happens, folks, at the end of the year, and this is where it's going to get really interesting, meaning that how much the banks need dollars at the end of the year. That's the bottom line. This is all worldwide too. It's because of the dollar. There's so many dollar bonds that are out there. So it's going to be intriguing that how many dollars do they have right now, how much they need for the regulations.
I read that article you sent me a week or a couple weeks ago, and it becomes like an annual kind of rush for. So some people are positioning ahead of that rush, and maybe it's already flushed, or maybe there'll be a.
That's the big one. So you know, Teddy, how, in the context of fundamentally, right? How does this work at the end of the year? You know, the banks need dollars, I guess, regulatory-wise, right? You know, the real question is, I guess, do they already have them? Or are they still going to be buying them in the next couple of weeks, right?
Yeah.
You know?
I think that it's already put in motion already. Okay. I think that the year end, actually, it's going to be already wrapped up in the bag already a couple weeks ahead of time.
Okay, cool. Yeah, that would make sense too, because if we were a big
Those bankers want to be on vacation come the end of December.
Yeah, we wouldn't be worried about, okay, we need another $100 billion on our balance sheet.
Also, you got to remember, we're looking at the first year with this new tax law. I think you're going to have a lot of people, like you were talking, I think, in the last segment about how this rally, there's a lot of stocks that are down, especially big ones. People are taking profits because this is the first year end that they can take profits and be like, hey, we're not going to have to pay a penalty, or not as much, correct?
Right.
So you're going to, would you want to risk the next couple of weeks? I mean, a lot of fund managers, especially end of November, if you're doing well, are you going to blow your portfolio over the holidays for year end?
No, I agree. And in fact, a lot of them, unfortunately, already blew their portfolio because, you know, it's right when this market started down, I remember saying on the air, we had 59 days left, and I was talking about that then. If I was a portfolio manager, 59 days left, I'd take the money.
Yeah, because you had 10% almost.
You know what I mean? It's like, okay, man, that's not a lot. Because,
now you're negative for the year.
Yeah, yeah. I mean, it's a big number. And, you know, I was just saying to Tommy a little bit earlier, it's hard to comprehend that the S&P is, you know, still basically flat up of 1%, because these equities, man, some of these big equities are down 25, 30% like nothing.
Apple, Netflix, Amazon,
yeah, you know, no doubt. So the yen, what do we think of the yen? We're almost at 114 in the yen again, man.
I like the U.S. dollar yen bull right now.
Okay.
I think it's definitely going to keep on pressing it. The Nikkei, right now, the Nikkei and the S&P is getting a nice bounce. I think it's going to keep on pressing, especially with the dollar bull in place. How can you fade it? You know, but like I said, with the speech today, if you were to get some kind of negative indication about our stress test with our banks, that would probably give you a quick little jitter to have a little sell-off in the dollar, you know, which would give the yen a boost, but I don't see it coming otherwise. I think you're going to see newer highs and pressing the yen for the next couple sessions. Yeah,
so this is going to get interesting coming in the year end. They slammed gold yesterday. Now, they didn't have a lot of volume, but they got that down pretty good. 1212 we're laying out there. Looks like it's going to go after the 1200 again.
It's quite a number, I know.
So
they're selling gold and buying Bitcoin.
Yeah. Good luck with that one, man.
Right.
You know, it's intriguing. I mean, you know, it's like looking at this Bitcoin. Even yesterday I was looking, I says, you know what? There was a you know, and this is where it's contrary, folks, but there was enough headlines everywhere that Bitcoin, you should have, and it did get a little bounce. You know, it was like everywhere yesterday, that's the end of the world on Bitcoin. It's like, okay, it's time for a bounce. You know?
Right.
And you can see, you know, one of the public companies, Galaxy folks, they come out this morning. They lost 136 million trading Bitcoin this year.
We just took a 50% haircut in the last 2 weeks, let alone what it's done this year.
Well, they're a market maker. I mean, but you know what? You know what's funny, Teddy, is that even when market makers, it's like they all need bull markets, man. We all need bull markets. Well, that's the reality.
To be a market maker going from 20,000 to 3,000, right? That's tough life.
And now you have the institutions that are getting involved.
Right. Right.
That's what's going to be very interesting to see how this pans out, because, I mean, we all know that when the institutions just get behind an IPO, what happens to it?
Oh,
you know,
big time.
So,
big time. And there's so many different ways to arbitrage the Bitcoin market. Some of them will be right, some of them will be wrong, and we're at the big, we'll see whether we're at the beginning of a few more blow-ups out here.
Yeah.
Trading derivatives.
Yeah. Oh, man. You talk about a little leverage, man. Leverage beyond belief. Listen, folks, Forex, Nadex-trading-unlocked. You can check them out every trading day. You can check them out right here. Wednesdays, 40 past the hour. Teddy, you have a great one, safe one. Stay warm, man. We look forward to speaking to you next Wednesday.
Next week.
Thank you,
Take
man.
care.
Thanks, Teddy.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 141, Nasdaq up 16, S&P's up 4.5. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 161. We get the Nasdaq up 16. S&Ps are up 6. And we're going to have our man, Mr. Basil Chapman, a week from last night, right?
That's right. 6 days from right now. He's going to be in there December 4th. Pretty remarkable. 6 days from now, it's going to be December 4th. I got to get my Christmas tree up. Still don't have that baby up. He's going to be in there with his subscribers to the opening call. What's next for the market? And he's going to be talking about after the October 4th sell signal in the Chapman Wave. What's next for the market? What sectors are likely to rally? Which need more time? I was chatting with him, setting this up, and he was saying, I want to do a workshop, maybe like an end of the year, talking about what's coming, wrapping up 2018, coming into 2019. So you can access that right on the front page. You can sign up. New subscribers get a 30-day money-back guarantee. You can sign up for whether it's monthly, 6-month, year. They all come with a 30-day money-back guarantee. I'm sure you're going to love that product. And you get the access to that 90-minute webinar, 5 till 6:30. You'll wrap up Tuesday night. Basil will be in there 5 till 6:30. I encourage people to check that out. 6 days from right now. So get in there.
When is the first then? The first? Yeah. Oh, it's Saturday then, right?
Probably. Let's get it. The first is Saturday. You got it.
Wow.
We're there.
That is crazy.
Have you done your Christmas shopping yet?
Christmas shopping.
You better get on it.
And Basil's also going to do a full-day workshop,
He is. So if you go under services, and we'll have this on the front page as well. We'll talk about it as it comes up. But 2 weeks from this Friday, I believe, and that is going to be it. You hit services, and that's where we have, whether it's the scanner, whether it's software, whether it's courses. Basil is doing a more in-depth, two-part, basically full-day workshop, 9 a.m. till 4 p.m. You take an hour for lunch, so it's going to be 2 3-hour segments, and he'll be in there, and that is going to be on Friday, December 14th, and that'll be $495, and a great deal talking about entries and exits when trading, an all-day event. You can check that out, see what he covers in each part of it. Check it out.
Stay right there, folks. We get Think or Swim coming up next, and I'm Mr. Basil Chapman, that's Steve Rhodes, Dave White. We'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.